Now we are going to be talking about the financial market, which is an interesting yet complex aspect of financing. So what is the financial market? The financial market encompasses diverse tools and entities where individuals, businesses, and governments engage in the buying and selling of financial assets. There are many types of categories in the financial market. Here are a couple of popular ones. Stock market, where shares of publicly traded companies are bought and sold, allowing investors to become partial owners and participate in the company's success through dividends and capital appreciation. Bond market involves the trading of debt securities, such as government and corporate bonds, providing issuers with capital and investors with regular interest payments. Foreign exchange, Forex, market deals with the exchange of currencies, allowing participants to trade one currency for another and take advantage of fluctuations in exchange rates. Commodity market involves the buying and selling of physical goods like gold, oil, and agricultural products, allowing investors to fight against price changes or speculate on commodity prices. Derivatives market includes financial contracts whose value is derived from an underlying asset, index, or rate. Examples include options and futures contracts. Money market focuses on short-term borrowing and lending, with tools like treasury bills, commercial paper providing a venue for participants to manage short-term financing. Real estate market involves the buying and selling of property, either directly or through financial tools like real estate investment trusts, REITs. How do I maximize earnings in the financial market? Achieving success in the financial market requires a comprehensive approach. Start by educating yourself on financial markets, tools, and investment strategies, staying up to date with market trends, economic indicators, and global events that can impact financial assets. Diversify your portfolio across different asset classes, industries, and geographic regions to reduce risk and mitigate the impact of poor performance in any single investment. Prioritize risk management by assessing your risk tolerance and implementing strategies like stop-loss orders to limit potential losses. Adopt a long-term perspective to navigate short-term market changes, as patience is often rewarded in the financial market. Regularly review and rebalance your portfolio, adjusting asset allocations based on market conditions and changes in your investment objectives. Stay disciplined, avoiding emotional decisions driven by market variations, and stick to your investment plan. Consider seeking professional advice from financial advisors or investment professionals tailored to your financial situation and goals. Utilize tax-advantaged accounts like IRAs and 401(k) to maximize earnings while minimizing tax liabilities. Reinvest earnings through dividends and interest to leverage compound growth, accelerating the accumulation of wealth over time. Embrace continuous learning to stay informed about evolving market trends, new financial machines, and emerging opportunities, enhancing your ability to make informed and effective investment decisions.